Good morning. We will pay attention to transactions with creditors today. The balances are given. Creditors is a liability, so the balance will be on the credit side. Bank and inventory is assets, so the balance will be brought down on the debit side. Receive an invoice for 6840 for goods purchased on credit. If we buy on credit, we owe more money to the creditors and my inventory will increase. The inventory account is debited with a 6840 to increase assets on the debit side. The creditors control is credited because liabilities increase on the credit side. Receive a credit note for goods returned. We owe less money to the creditors, so we will debit the creditors with a 342, and we have less inventory available, so we will reduce the inventory on the credit side with 342. Issued a check to Eloise as part payment of the account. We take money out of the bank, so asset decreases on the credit side with 3,000. We pay the creditors, so we owe the creditors liability less money on the debit side. We receive 300 Rand discount, so we will debit the creditors control to decrease the amount that we owe with 300 Rand. And we will credit discount received with 300 because the income increases on the credit side. When we balance the creditors control account, we know that a liability always have a credit balance, so the total on the credit side will be bigger than the total on the debit side. So we add up the credit side and we subtract the figures on the debit side from the total on the credit side to determine what is the balance or the difference between the debit and credit side. This balance is carried down above the totals, and you will bring down the balance below the total so that in the next month, in July, we will start with an outstanding debt of 33,198. The bank on the debit side is bigger, so we will add up the debit side, subtract the amount on the credit side to work out what is the balancing figure, and we will bring down the balancing figure to start the bank account on the 1st of July with 15,000 in the bank. In the inventory account, the asset always have a debit balance, so we know that we must add the debit side first. Then we subtract the 342 to work out what is the difference between the debit and credit side, and we will bring down that balance below the total on the opposite side. When we buy goods, we receive an invoice. It is recorded in the creditors journal. Inventory is an asset, so assets will increase on the debit side. Creditors control is a liability that will increase on the credit side. When we receive an allowance from a creditor because we return goods or there was a mistake on the invoice, a credit note is received from the creditor. It is recorded in the creditor's allowances journal. We will decrease the creditor on the debit side so that liabilities can decrease. Inventory was returned, so it means that we have less inventory, so assets will decrease. If we pay money, we will pay with a check. So our source document will be check counterfoil. It will be recorded in the cash payments journal. Creditors control is debited to decrease the liabilities with the 3,000 paid. Bank is credited to decrease assets with the 3,000. And we will also record the discount received in this cash payments journal. So creditors will decrease the liabilities with a 300 Rand discount. Discount received is an income that will increase profits, so equity will increase with 300 Rand. Transactions with creditors increase on the credit side and decrease on the debit side. Transactions on the credit side increases the liabilities, and on the debit side, it decreases the liability. When we look at the first source documents, when we deal with a creditor, we will receive an invoice and we will receive a credit note. If it is with a debtor, the transaction, we will issue an invoice and issue a credit note.